Melissa, it's a moment we've been waiting for. Lyft has priced its IPO at $72 per share. According to a source, this new price gives the company an initial market cap of $20.5 billion on a non-diluted basis. It will start trading tomorrow morning on the NASDAQ. Now, this is a major jump from its last private market valuation of $15 billion, and it comes after the company, we've been talking about this lots, lost over $900 million last year. But of course, there was a ton of interest in this listing. It was oversubscribed very early on in the roadshow, and Lyft raised the range yesterday. Now, we're going through these numbers. The pricing also tells us how much Lyft's founders and early investors are making, at least on paper. Logan Green's stake worth around $600 million based on this pricing. John Zimmer's, the other co-founder, worth about $415 million. Other big winners in this IPO are Ben Horowitz of Andreessen Horowitz, Capital G's David Lowy on the board, and Japanese e-commerce company Rakuten. We'll continue to go through this. The lead underwriters, remember, they are JP Morgan, Credit Suisse, and Jefferies. We'll bring you more as we have it, Melissa.
All right, Deirdre, thank you. Deirdre Bosa joining us in San Francisco. So we knew that this is going to be a hot one, Pete, but it looks like it really came up.
And especially when we look at where the pricing was just not long ago, and we continue to see it go up, 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 and now it goes to the top end of the range from that 70 to 72. I mean, this is something that everybody's been talking about, oversubscribed. Everybody wants this. I think the key is, what does this stock look like a week from now? I mean, forget about what it does tomorrow. What's it going to do in a week from now when it's a company that hasn't made money? They don't know when they're ever going to make money. And last year, what did they lose? 900 million, she said?
I'm glad that you mentioned that, because the comparison is the biggest IPO since Snap. And what happened with Snap stock
I don't think the lens should be what's going to happen in a week from now. I mean, think about this is a massively transformative company. We were talking about it last night on the desk. What they're doing to the addressable market as it relates to transportation as a service, it's tremendously disruptive. And, you know, you talk about profitability. Amazon went public in 1997. They didn't turn a profit until like late 2001, 2002 on an annual basis. And even then, they had very little profits because they kept on investing back. So when you think about Lyft, it is a pure play on the ride-hail market here in the U.S. And they're also going to be plowing investment dollars into autonomy. And that is the future of transportation. So to me, I think it's, who cares what it's going to do a week from now? I mean, this thing has been valued up pretty dramatically over the short period of time. I think this is a very unique opportunity, unlike Snap a couple years ago.
I appreciate that idea that take a look at Amazon. But in terms of investing at this point in the company's life cycle, are we investing in the same point from Amazon's life cycle when it IPO'd?
No,
I mean, it was much earlier, right?
I agree with that. So that was the first inning, the first pitch of the first inning back then or whatever. But I don't think investors felt that way in 2001 when the company was still losing money.
Let's get more on the Lyft IPO. Bring in Loup Ventures founder and Fast Money friend Gene Munster. He joins us from Minneapolis. All right, Gene. It sounds like you don't necessarily, you're not a believer in this Lyft IPO shorter term, but longer term, you like this idea.
Yeah, that's exactly right, Melissa. Is that in the near term, this is not a great business. I think there are some differences between what's going on with Lyft versus what happened with Amazon. This is going to create some heartburn for investors over the next couple of years. Long term, totally agree on the opportunity here. The world needs ride sharing. About 10% of people in the U.S. use Lyft or some form of ride sharing, and that number undoubtedly is going to go up dramatically. But let's talk about the near term briefly here. The big distinction is that their business model currently, as you've already defined, is losing money. But this concept of a shift to a world of autonomy, that is a major change in their business model. Think about the supply side that they have of drivers and the demand side with consumers. That whole supply side equation gets turned around, which means there's opportunities for other players to start to get in the mix. I liken the Lyft IPO more to, you mentioned Snap. I think it's more like Tesla. Minus the headache of Elon Musk. But this idea that this company has an opportunity to fundamentally change the world, but the business is going to be dramatically different. I can't understate that. This is going to be a very different business when autonomy comes. And I think for any investor, knowing what the kind of investment that it's going to take to ensure their play in that future, that's an open-ended question. I think that has an impact on the current valuation.
But that implies, I mean, even if the comparison is better to Tesla as opposed to Amazon, the first 10 years, right, of Tesla's lifespan as a publicly traded company, they were good years for investors who got in early.
I think they will. I think the first 10 years absolutely will be good years. I think the next 2 years won't be so good years for investors in Lyft. And I would just put this, I mean, we're talking about trading at a 10 times revenue multiple. If you fast forward a year from now, they're growing at 100%. So that means it's really trading at a 5 times. That's a SaaS-like multiple. I understand the open-ended opportunity here, but I do think that this is a little too far, too fast.
You think investors should stay away from this for the first 2 years, or do you think, you know what, the next 2 years are rough, but this is still something that you should invest in?
If an investor has the luxury of owning something and basically putting it away for literally the next 2 to 5 years, I think that they should own it on the IPO. I think that you're going to get a better chance for people who need to be a little bit more nimble to eventually buy this stock at less than a $20 billion valuation.
Gene, what does this mean for Uber when they, when they come out? Is this, it must be a great sign for them, or is it a question of, is it zero sum? I don't think it is.
It's a good sign for Uber. I mean, just taking a step back and thinking about what this means for tech IPOs in general and for players like other players in the ride-sharing market, whether it's Waymo or Google, I think this is a positive. I do want to point out one theme just in terms of user behavior. The way we approach transportation today, typically if you're thinking ride-sharing, you go to Lyft or an Uber app. If you're thinking I'm not taking a ride, I'm walking or driving, you go to Google. Google has a huge opportunity here because they own that top of the funnel, more than a billion monthly users on Google Maps. As Google starts to onboard Waymo into that app, I mean, that is a powerful top of the funnel. And I think when I think about other players that are impacted by this, I think Google should have some sort of an impact, a positive impact on their valuation just based on the opportunity around Waymo and what they've already established as a go-to app around transportation.
You're telling me then, Gene, that possibly one of the most deeply pocketed companies out there could potentially be a major rival, and they've already got a leg up with their own autonomous technology down the road. I mean, that doesn't really speak well to the prospects for Lyft and Uber unless they're acquisition targets.
Yeah, they could be acquisition targets. I think there's room for multiple players to win in this space. When I think about the near-term investments, that's part of the reason why we're negative on the near-term on Lyft, is that we think that they need to spend a lot of money to make sure they're properly positioned against the deep pockets of Google.
All right, Gene, thank you so much for joining us. We do appreciate it. It's always great to get your insight.
Thank
Gene
you.
Munster of Loup Ventures. Phil, what does this mean? The fact that this is oversubscribed, it raised its range, priced above this range.
Yep.
What does this indicate?
So from a sentiment standpoint, the market's looking for some direction here, right? So I think, Pete made a point about the next week. I think it's really important that this goes well over the next week, actually.
For the markets overall.
For the markets in general. And what Guy was talking about the companies that are coming behind it. This is, what was the phrase, stampede of unicorns that people were talking about, right? So after this, if this crashes and burns, right, that's a bad sign for sentiment, and then what's coming after that from the IPO.
Is that going to be an indicator for you, Pete?
I think to some degree, yes. But I still look at everything in their own individual silo, and I look at this particular name, and the reason I say that, when Snap came out, it jumped right away to $27 a share, almost immediately. I think it was day 1 or 2. It hasn't even come close to returning to those levels since. I view this the way Gene's talking about. Okay, Snap, maybe Snap does work 5 years from now. Maybe Lyft works 5 years from now. But do you want to wait? Is your money that value to you that you'd rather sit there and wait in Lyft and wait at $72 and watch it sink down, most likely, in my opinion, as it's burning money, as everybody else and competition starts to step in? I mean, we don't. If you think it's just Lyft and and there's only 2 guys in the game, Uber and Lyft, that's not true. There are places all over the country you can go to. There are multiple others that are competing at a much lower level. So I think competition's going to make it that much tougher.
I think Phil makes a really good point from a sentiment standpoint. You just talked about the stampede that's coming. I think Uber will be the test. This is like an appetizer or a amuse-bouche, as you call it, or something like that. This is just a little bit of a taste, because when Uber and they start talking about $100 billion valuation, that is going to be the test. That would be a Fortune 100 company there by market cap. So to me, and then we know what comes after that. We got Pinterest. We're going to have WeWork at some point. Airbnb. I mean, the list goes on and on and on, and these are massive market caps. So you tell me, when we have mega cap tech that's kind of stalled out here, is there an appetite for all these companies that are basically all losing money? I'm not so certain if they all come too close together.
Or are we in this kind of market where people are so reaching for growth that they're willing to go out on the risk spectrum and invest in these unicorns?
Clearly where we are, especially with the Fed at there. And there's some great TV shows on the CNBC network. And this morning I was watching the squawk on the street. When
fine program.
It is a fine program. And they asked Jim Cramer about this IPO specifically. He said, if this goes well, it's a great sign for the market and the retail investor. I'm paraphrasing, but I think that's sort of what Phil is saying. So clearly this is probably a positive for the market. My concern would be Pete's concerns as well. If this market were to turn, which we can debate whether or not it is, first thing's going to go are names like Lyft. So I would be concerned, given how the frothiness of this, that this exuberance won't last.